one factor that could trigger a correction or some type of decline as you see it is inflation and rising inflation expectations. But it does appear, for now at least, that it's somewhat contained and benign, at least from the Federal Reserve's eyes, which is important to investors. Do you see it differently?
I think there continues to be evidence that inflation is continuing to rise, Sarah. I don't see runaway inflation. I don't really think there's a big risk of that. But I do think we're moving wage inflation eventually up towards 3.5%, and consumer price inflation probably breaks 3% this year, in my view. Look at, it's not just wages. They're going up too, but it's what's happening with commodity prices. Crude oil today just hit a 3.5-year high. Inflation expectations in the bond market are close to 3.5-year highs and rising. You've got the ISM price surveys for manufacturers and service sector that's gone to a 7 or 8-year high here in the most recent release. The employment cost index has risen to one of its highest levels in the last several years. You're seeing core inflation that just shot up here a little bit again, and you're seeing some of that same thing around the globe. So I think just aggregately, you're seeing more and more evidence that inflation has changed its stripes and is headed higher. And what we're doing as a result of this is we're being forced to readjust interest rates and ultimately price earnings multiples in stocks.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.